Hello everyone, Brandon Montemayor here with Montemayor Associates, your #1 real estate resource. So we're getting a lot of questions recently about when you sell your home, how are you taxed on that? All right, capital gains taxes and how that applies to you as a homeowner. So we're going to answer those questions today. Let's jump right in. All right, so with capital gains, right, we've had a lot of questions and concerns with that because it is something we're talking about big dollars, especially in an appreciating market like we're in today. So something to keep in mind. When it comes to capital gains, as long as you've lived in your primary residence, now that's an important part, is primary residence. It can't be an investment property, all right? There's different ways to defer taxes like a 1031 exchange. We'll come back to that. But on your primary residence, right, you are eligible as long as you lived in that home for 2 years or more as your primary residence, right? You're exempt up to $250,000, right, as a single person, or $500,000 as a married couple. So there are some exceptions to that rule, right? If you have to sell under 2 years, right, under 2 years, and there's some sort of hardship, whether it be a job, a divorce, relocation, something along those lines, talk to your accountant. There's a possibility that you can still be exempt and not have lived there 2 years. The other thing to keep in mind is we've had investors who've bought 4 or 5 houses and they go all the way in, lived on the last one for 2 years, claim the exemption, move to the previous one and back their way out. There are some rules we got to keep in mind there because you have to live in the house a certain amount of years. It's not just 2 years in that case, but a certain amount of years of the total ownership in order to qualify. But if you only have one home as your primary residence, you've lived in it 2 years, you can sell it and be tax exempt, like we said, up to $250,000 as an individual, $500,000 as a married couple. And then on the investment end, and that's the investment end only as an investment property, you can do a 1031 exchange and take the full amount and roll it into another property without getting taxed. Now, just know that for your primary residence, this 1031 option is not available. Again, primary residence, the $250,000 and $50,000. All right, the 1031 exchange is the full amount, and there's some rules to that. How you have to identify properties, how soon you have to move that money into another property, all things to consider, and we can walk you through all of that 100%. But there you go, capital gains. Again, one of the questions we get asked often is, I've claimed that like 5, 6, 10 years ago on a previous property. Can I do it again? Absolutely. You can do it as many times as you want as of right now, as long as, again, keyword, primary residence, and you've been there for at least 2 years. So again, any questions, give us a call. You know where to find us. Have a great day.